Hi, welcome back, investors, to the Invest in Value channel. I'm Victor, and today I'm going to be covering a company by the name of Xperi, stock symbol XPER. This is a growing technology company that helps media companies provide better experiences for consumers to watch their movies, listen to music. Overall, really, they help the streaming industry. Before I jump into XPER, do me a giant favor and like my video. Also consider subscribing if you'd like to watch more videos on small value plays in the stock market, as well as videos on bonds, cryptocurrency, and real estate. Let me jump into XPER and give you a quick overview of the company. Then I'll get into where their stock's traded, an intrinsic value calculation, and then my outlook on this company. So first, XPER powers the companies that you probably use to stream content, listen to music. When you're in your car and you're listening to music, you're probably using an XPER technology. They license their product to companies and then collect royalties on those agreements. So I like those models because there's a very low cost of sale in those models. And as long as they have a great technology that everybody wants, it makes the company very valuable. In this case here, the company generates free cash flows, have a history of generating free cash flows, as well as they have a history over the last 5 years of growing, which I really like. XPER has been going down in price over the last year, and to some people that's bad news, to some people it's good news. For me, it's good news. That means that I get to buy this stock at a discount. So over the last year, stock's down 22%. If you look at the price historically, it's gone up and down for the last 5 years, and year to date, it's gone down with the rest of the market. Now, I'm a value investor, so I'm looking for companies at a discount. I love finding unknown companies that I believe are going to have a good return over the next 5 years. So this company, I believe, fits that category. It's a $1.8 billion company, so it's a small cap company. They pay a small dividend of 1.14%. So that's nice that they return a little capital to you each year, even though they're growing. That just shows that they're generating enough free cash flow to give investors a small dividend. Their trading range, they're right in the middle of it. They're at $17.49 a share, and right in the middle of their 52-week trading range. All right, so let's take a look at the intrinsic value of XPER. So this little company has been growing quite a bit over the last 5 years. I use last 4-year growth rate, and they've grown at 29%. Their free cash flows have grown nicely at 31% over the last 4 or 5 years. So I went a conservative route on my model. I only use 4%, really for the next 5 years, as well as, long-term growth rate of 4%. They're in a space, streaming, it continues to grow. And just about everything's being streamed. All the different media outlets stream. There's more content being created. So this space as a whole is really expanding. So I'm optimistic that 4% is going to happen. So I took the last trailing 12 months free cash flow, 221 million, put that into my model, and I came up with 2.5 billion as the intrinsic value of the company as a whole. They currently have a market cap of 1.8 billion. So it really offers an opportunity for buying this stock at a discount. If I take the shares outstanding of 105 million, I believe that the intrinsic value per share of this company is $24.22. Current stock price is $17.49. So I estimate that you would be getting this stock at a 39% discount. Just a really good little company, pays a small dividend, and really can really grow the streaming, industry, because they power the technology behind it. They're not competing with Netflix or all the different streaming services. They're powering companies that want to be in that marketplace. All right, guys, so let me summarize XPER, starting with their performance. So last year, their performance wasn't great. Their revenue went down 1.6%, although, historically, they've grown really well, 29% over the last 4 years. The fourth quarter was really where they lost a lot of revenues, I think, due to their licensing agreements. There was timing differences there with the licensing agreements. Free cash flow is solid at 221 million. And again, they've grown free cash flows over the last 5 years. So I'd like to see that as a value investor. They have plenty of cash on the balance sheet of 262 million. If you compare that to the market cap, that's 14%. You look at their liabilities, their cash balance is 19.5% of total liabilities, and they can pay off all their liabilities over 4 years. So the balance sheet is really strong. This company is going to be around for a while. The company has guided that they're going to grow 4% in 2022. So that's a solid number. I totally see that number. Might be surprises to the upside because management tends to guide conservatively, and I think there's a chance to surprise on the upside. It's no secret, we're all streaming. Our cars are so connected these days. I mean, you got navigation, you got in-car entertainment. It's just, there's just a lot there where the whole industry is growing, and XPER is going to benefit from that. Their free cash flow is going to remain at the levels that we saw in 2021. A couple of things to note that should affect next year. The pay for TV segment is really growing fast. So I think that's going to affect the company in a positive way. And I think one sign of confidence in XPER is Micron, the big, computer component, technology component manufacturer, signed an agreement to embed the XPER technology in a lot of their devices. So that's good to see. My outlook on the stock, they're going to grow 4 or more %, per year over time. I'm a value investor, so this one is not like my home run multi-bagger bet. This one's more of this is a good buy. You're getting at a discount. You hold it, and you'll see that they will appreciate in value, and they'll return your capital. The low-cost model is something that I like with XPER. A lot of their agreements and licensing agreements, they don't cost much to administer, and not a lot of selling expense involved in that type of that business segment. So I really like that aspect of their business. And again, I believe that XPER will appreciate over time. So it's a good buy and hold stock. It's not a major position in my portfolio. It's a position. I have a couple of streaming companies like Discovery. I'm also buying the AT&T stock with the Discovery component that will come through the HBO spinoff and matching with Discovery, as well as Paramount as one of my holdings. So I believe this space is a very fertile space, and XPER is one of the actors in that space that's really behind the scenes. They're providing the technology. So I believe they're going to benefit from that as well. So actively, I'm going to really study their earnings calls. I think the next earnings call is going to be really important so that it really sets the table for 2022. So I'm going to really study their earnings call that is coming up in about a month and a half. And that's going to set, my plan for 2022. If they surprise to the upside and they really put forward a really confident, quarter, then I'm going to buy more of their stock in 2022. If not, I'll hold. And if I get bad news, then I'll have to, sell some shares, maybe exit the position as a whole. If they surprise the downside, and if they show that they're not executing their plan, they're not really hitting metrics that I see that they should be hitting in order to be the company that I believe they are. So just a quick reminder that my videos are for entertainment purposes only. I'm not recommending you buy or sell any stock or security. I'd like to tell my point of view on stocks, my experiences with stocks, but it's really for entertainment purposes only. So thank you very much for watching my video. Do me a giant favor and like my video. Consider subscribing if you want to see more videos like this one. Let me wish you the best of success in investing in 2022, and I'll see you on the next video.